Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had good day trading today. Market is up about 1.5% today. Where's my arrow there? There you go. About 1.5% today. I think similar to yesterday, it's been the small caps and the banks that led the way today. And I think we kind of talked about that over the weekend market update video, didn't we? We talked about how not that the small caps and the banks, some of these lagging indices to drag, other indices down, but I believe that the large indices are going to pull some of these lagging indices up, and there might be, catching up job that might be happening, meaning, because we saw, I think like NASDAQ is almost breaking even or something like that, or maybe up a little bit, but you can see S&P's up 1.5 while the banks are 4.5, and like I think Russell 2000 is doubling it, which is up like 3%. So you can see that how there's money rotation occurring, where some of the monies are flowing out of the large tech. Even the Qs were up a little bit towards the end of the day today, but they were down. And actually, the Qs were going down quite a bit early session today. And then, what happened was, as the small caps and the banks, some of these beaten down stocks, I saw a lot of the bank stocks been rising higher today, and some of the airline stocks and like cruise line stocks, a lot of stocks that have been just really beaten down that's been really pulling the market up. And you can see right here, Goldman Sachs is up about 7%. JP Morgan is up, about 6%. Morgan Stanley's up 7%. So a lot of these stocks gotten beaten down heavily, right? And they weren't moving like some of the large tech stocks, like Apple, Netflix, Google, Facebook. Some of those stocks were moving hard to the upside, while some of these bank stocks been just pretty much grinding, mopping the floor. And you can see now they're finally moving up here, and that's what's kind of propping up the market, at least this week. And with that pressure, with that buying momentum that we've seen from some of these beaten down stocks, the small cap stocks and bank stocks today, that really helped to find that momentum on the S&P. And so then you can see that move on the last 4 hours. So that's the first hour, second hour, third, fourth, fifth, sixth, right? So looking at things in a short term here, we had initially gapped up, and we talked about 299 and 297. We talked about it yesterday being an important level, and that's a prior resistance, new support level there. In the first hour, we saw that hammer candle right on that 297 pivot, or that 297. Yeah, that's a pivot, the horizontal pivot, because that was a prior resistance and potentially be a new support. And that's a level that coinciding with my short-term moving average. We've been tracking this moving average quite some time here, and you can see even last several days of trading sessions on the S&P, that was where we saw that abrupt sell-off. We gapped that up, and then we started grinding lower, and that was the level we saw the dip buyers coming in. And then you can see all throughout here, May 22nd, late last week, I mean, that moving average has been just really, really making sure bears not going any lower. And then we saw a big gap up. That was Monday, and then this was Tuesday. Right? So Monday, Mondays was holiday. So this was Tuesday, right? This was Tuesday. We grinded lower after a big gap up, and initially we gapped up today, early morning session, where you can see we saw a gap up above the, just right at that level there, the prior opening level from Tuesday, which was that 302, 300-ish level. But instead of kind of moving higher, like you can see here, because we saw very, very similar action back in May 19th or May 20th. That's May 19th, the last hour. We saw the sell-off. And then next day, we gapped that up, right? And it was right on that moving average. And we initially popped for the first hour, second hour, third hour. We just been hanging around there pretty much entire day. And then it started fizzling lower next day. This time we popped, but we didn't see a follow through on the first hour. Instead, it came back down, filled the entirety of that gap. And then we pulled back, and that's where we saw buying activities came right on the moving average, coinciding with the prior resistance, potentially a new support. We threw that hammer candle there, and we saw a follow-through day, or not day, follow-through hour, and then ever since then, it continued higher. We made new high for the day. So this gap's been filled, right? So this partial gap is filled. So the entirety of that gap has not been filled. And we've been talking about this too. We've been tracking this. When the gap does not get filled, entirety of it, that's bullish. And we've been talking about that in these daily update videos, and we'll be navigating through pretty much throughout the last couple of months where there has been a lot of gaps. And you can see even here, there was this gap up, right, on May 18th. Bears trying to bring it down, trying to fill the gap. They were not able to succeed filling the entirety of that gap. And that was a bullish sentiment. Same thing here. You know, we saw a gap, bears brought it down, and then they did not, as of today, they did not able to fill the entirety of that gap. They left a little bit. Again, when the gap doesn't get filled all the way, that favors the buyers. And we've also talked about it here, right? Talked about there was a gap here that wasn't filled, the entirety of it. What other time was there? I think those are here, right? And here, right? I think this is more, it makes more sense because this was a big gap here. So very, very similar action to what we saw, I think, like, you know, May 21st or May 22nd, because there's this big gap. That's a pretty sizable gap. And the next day, you can see price dripped lower and did not fill the entirety of that gap. We kind of left a little bit, and we talked about, you know, in the daily update video on that day that that's going to favor the buyers. Same thing happened here. We got the big gap up, and then, you know, price dripped lower, and then was not able to fill the entirety of that gap. Again, when that happens, especially in a longer term uptrend sentiment, we have bears not able to fill those gaps or fill the gap right away. It's gonna favor the buyers. As soon as, you know, bears were tired in the short term, bulls brought it back up there. So let's do a little bit of maintenance here. Let's bring that back up because that's the prior resistance. Potentially, it's gonna provide us, you know, micro term support going into tomorrow. I'm going to do this, and I'll just remove that for now. And then we still got that short term moving average rising. So current support is 302 and 298. So let's zoom out a little bit, and let's see where we're at looking at the longer term picture here. So you can see now the buyers on the S&P is looking for getting up here at 310-ish level to fill this gap, right? And buyers been doing a really good job in the last couple months since April, late March, because there are a lot of gap downs and filled many of these down gaps while buyers been opening up their own gaps, right? You can see how many gaps we have opened now. We got 1, 2, 3, 4, little gap there, 5, 6 gaps. 6 gaps, and they continue to stay open. This first breakaway gap that was open on March 23rd, well, it's been open almost 2 months now. And this, continuation island gap it's been open almost almost close to 2 months also, right? And so the longer these gaps stay open, the better it is gonna be while the buyers developing this trend. And at this point, it will be very, very difficult. And this is a news that bears probably don't want to hear. But at this point, it will be very, very difficult. The probability is very extremely low for the price to come back down and retest some of these major March lows, 220. There's too much cultivation have been done. An uptrend is fully valid, and they're very well strengthened at this point. And this uptrend that has gone on since the March lows, it's no longer, you cannot categorize this bounce as quote unquote dead cat bounce. I mean, how many times you heard that term, back in late March, early April, pretty much all throughout April, people are all talking about this dead cat bounce. And at this point, this is not a dead cat bounce. This is now turning into a very well maturing uptrend. And we want to give respect in that uptrend that it may continue higher, even if we do see another shakedown, shenanigan, bloody day. Right, 3% down there, 2% down there, something like that. We'll continue to look at these levels together, but as long as market is continue to cultivate an uptrend in this fashion, we've been talking about this just throughout this April and May shenanigans. Use how much up and down move that we saw here, and how many people are talking about this head and shoulder formation that never played out. And from that point on, market is up about 10%. Remember that? From that point, I think market is up 10% since a lot of people are so concerned about that head and shoulder formation or triple top or something like that, right? That's why you want to continue to give benefit of the doubt when you see the cultivation, when you see the establishment. And despite the fact that what your emotion tells you, because of what's going on around us with the fundamental and economical data that is still horrendous, sometimes, man, market moves illogical, irrational way. Market does not always move in a way where, why you think market should do something a lot of time. Because think about it, if you're thinking that market is going to do something, majority of people are thinking the same thing, because the majority of people are all looking at, watching, reading same stuff. This is why it's very important you understand that market fools the majority. So if you're listening to, reading, watching the exact same things that everybody else is watching and reading, listening to, then you tend to be wrong on your forecast on the overall stock market. Right? I mean, think about how the sentiment was back in late March. Did anybody even consider 300 in just few months? Did anybody consider 300 in just few months? Did anybody thought that we could get up here this much before May ends? Not many. There were some. Very, very few. And that's how the market usually operates. Market is going to reward those very, very few. And usually market is going to punish the majority. Right? Market always fools the majority. Socrates said, if you want to be wrong, then follow the masses. Right? So before I let you guys go, let's look at the oscillator, because we've been talking about this oscillator and following. You know what? Actually, I kind of want to draw in another different pivot now. So what I want to do is, you see this level right here? I actually wanted to do that. I almost forgot. Right there. You see this? That's important because now that's a new pivot that market has just established. That's the support. That's the resistance. That's the resistance. That's the resistance. It's no mistake. We saw bounce right at that level, right? You know what? Let's actually make that. Let's make that actually a purple. Let's make that a purple. So it kind of pops out, yeah. And then for now, let's get rid of these guys. Because I know we've been tracking those, but let's remove that. We'll put it back in if the price actually. So there's still a lot of moving averages that bears need to go through. We got the short-term moving average there. We got mid-term moving average. We got longer-term moving average there. So those pivots, those old pivots, is probably not going to be useful at this point, unless the price comes back down to 270 or something like that. But it's going to be difficult at this point, what it looks like. So that's going to be important pivot right here. So we're going to start tracking that pivot, and then we'll go from there. Here, before I let you guys go here, so we talked about yesterday this oscillator. It's so funny because it looked like at one point it's gonna roll over and it's gonna have its bearish divergence. That's what it looked like, and it looks like what today's move is like. A lot of it is just like shaking bears out. When we saw that gap up and then it start coming down pretty hard first couple hours, I think a lot of bears might have jumped back in short, or they thought that was one fake out, before that thing craps, pukes to the, downside. And I think that abrupt sell-off that we saw in the first 2 hours after the gap up, I think it kind of excited many bears trying to short that. And then even here, it looked like, you see at one point, they were rolling over. And then with that last 4 hours of rally, it's crossing back up. So it's not like it, you know what I mean? It's crossing back up here. So what it should have looked like, it should have that blue line, right? So the blue line should have continued lower like this, and then the purple line should have done something like that. That would have been a perfect bearish divergence, right? That would have been that initial confirmation, the first stage confirmation of bearish divergence. If this would have continued to lower and fill that gap today, then that oscillator will look a whole lot different by now. It would have looked like that. And then that would give you bearish divergence, even with the short-term pop, possibly. Then potentially this would come down to at least to retest that mid-term moving average. Instead, we just crossed back up. So now we still don't know that yet. What's gonna happen? We just crossed. So if we do see a continuation tomorrow, we'll come back and follow up on this. If we do see a continuation to the upside tomorrow, you're gonna see this thing looking like that. Like that. And we still got a lot of room. That's a couple days of move there, maybe 1 or 2 days around there. There's still a lot of room until it gets into overbought level, right? So let's come back tomorrow. Let's re-examine these levels tomorrow, right? And let's see how the market is behaving. See if we do see a continuation to the upside tomorrow, or are we gonna see a quick, head fake move where it looks like it's gonna break out and come right back down. But remember, in an uptrend, even if it sees a pullback after it cultivates higher high, many times it is pulling back to establish higher low. So you can't always look at it as a trap. Every time when there's a higher high, people usually bears in an uptrend, they like to call that a trap, but it's really not a trap. Like here, like people thought that was a trap. That's really not a trap. That's more like a cultivation, right? Higher high and higher high. You see that? It's always on a trap. But it's a trap if you're working with a longer term downtrend. See, let's say this is happening a longer term downtrend, and then it pokes its head up, right? After clearing the resistance, there's higher probability that being a trap. So you kind of have to understand overall sentiment of this market. Are we in a longer term uptrend or are we in a longer term downtrend? From then, your analysis is completely different, how you look at things, right? We'll come back tomorrow. We'll follow up. We'll go from there. You guys have a wonderful evening and good luck trading tomorrow.